As usual on a Friday, we have the weekly wrap-up programme, and today's commentary is from Mr. Holger Schmieding, Chief Economist at Berenberg Bank in London. Now, German IFO business climate for September came in better than expected. Companies were more optimistic about their business outlook, but then the Volkswagen scandal erupted. In your opinion, what effect will this have on the German economy?
Well, of course, the Dieselgate scandal is a significant blow to the image of German engineering across the world. It really now depends on whether this is an isolated incident or whether we will have similar scandals erupting in the near future, as now, of course, a lot of people will be looking at such issues. My best guess is that this is not a scandal that will spread to other branches of industry, such as chemicals industry, machine tools industry. And if so, then this will have only a very modest and limited impact on the overall German economy. The manufacture of cars and car parts accounts for about 2.7% of GDP. If there is one little setback in there, Germany can probably stomach it, especially at a time where Germany is granting itself an unexpected fiscal stimulus due to the extra spending on refugees.
German consumer confidence is expected to fall further to 9.6 in October. What are the main reasons behind this projection?
Well, consumer confidence has been very, very high a few months ago, helped by very low oil prices. Now that people get used to the very low oil prices, there is a bit less of a tailwind, a perceived tailwind from this factor to consumer confidence. Also, some consumers may be worrying a little about the overall situation in the world economy and about the potential impact of refugees. I do think that we will not see a significant slowdown in consumer spending. Even with a modest setback, consumer confidence is high, employment growth is strong, and wages are expanding at a nominal rate of close to 3%, which at low inflation means real wages are also rising very nicely. Germans have the money to spend and will probably continue to spend it even with a modest dip in confidence.
Bank of Canada Governor Stephen Poloz said in a speech earlier in the week that the resource sector will just have to go with the flow of falling oil prices. How do you think the industry took to that remark, and what do you make of it?
Well, I can't really comment very much on individual industries. I do think that low oil prices are more or less here to stay, largely because of the extra supply from the US and to some extent of the expected extra supply from Iran. And with the marginal cost of extracting oil in the US through fracking technologies declining, we likely have a bit of a ceiling for oil prices at around $60, a ceiling that will likely drop a bit in coming years. My best guess is that oil prices will hover around $50 per barrel for the foreseeable future, which for the world economy is good news, as it means oil remains fairly affordable for all oil users, although of course some oil-producing countries will take quite a while to get used to that and will continue to have a few painful adjustment crises in between.
We saw weak manufacturing data from China during the week. However, Dennis Lockhart said that the world is overreacting to the slowdown in China. Would you agree, and what are you expecting? Are you expecting any changes to the finalized US GDP figures for the second quarter today?
I do not expect any significant change to the final US GDP data. Of course, we'll have to see, but nothing has come out in the meantime in terms of high-frequency data which would shed a different light on the second quarter in the US than what we had known so far. I do very much agree with Lockhart that the market is over-interpreting the Chinese events. China does have a slowdown. It does have some policy confusion as to how to react to this slowdown. It has made some policy mistakes in handling the equity markets, in handling its exchange rate. But it is unlikely, in my view, highly unlikely, that the Chinese economy is heading for a hard landing. There is no clear indication in the data for a really hard landing. The PMI data, for instance, are still consistent with a soft landing. And on top of that, if China really had to, it could open the floodgates of credit or even of fiscal stimulus to combat a hard landing. China, with its huge savings rate, has the resources to prevent a hard landing. It cannot prevent the slowdown, but the hard landing, and I think they would, if need be, do so. So I am sort of relaxed about China. There is the slowdown going on, but I wouldn't, like Lockhart, say, don't worry too much about it. The Chinese will be able to prevent something that would really affect the world economy very negatively, a hard landing.
Now we've got the Catalonian parliamentary election coming up on Sunday. What outcome are you expecting? And if Catalonia succeeds in becoming independent down the line, what effects will this have on the Spanish economy?
Opinion polls project that the pro-independence parties in Catalonia will be the strongest parties, but that they will not have a very strong majority of seats in the regional parliament. I do not see a way in which Catalonia could really become independent and stay in the EU as it wants to, because any new member to the European Union would have to be accepted by all other members. In other words, Catalonia could become independent within the European Union only if Madrid, Spain agrees, and that looks very unlikely. I think we are up for a little noise in coming months about the Catalan issue. I do think that, judging by opinion polls, the vote in Catalonia will not be so clear-cut pro-independence that it would mean a strong political mandate that would have to be recognized by Madrid and other capitals of Europe. My ultimate guess is that at some time after the Spanish national elections later this year, at some time thereafter, the Catalan leaders and the new or changed government in Madrid will sit down and settle their differences along the lines more independence for Catalonia, especially more tax autonomy, but not full-scale independence. And if so, this will be a modest market irritant in the meantime, but not have a major impact on the Spanish economy and on Spanish asset prices.
Well, thank you very much, Mr. Schmieding, for sharing your view with us today. Well, that is all for now. Have a great weekend ahead.